All right, so we're going to do top three ETFs this week. Danny, take it away.
So we're going to start with the lowest risk and possibly lowest return, which sounds backwards, but it's as close to a money market as you can get. If you just want to park some money and know that in a year you're going to have 2% more, this is the way to go. GBIL is just a fund that every 30 days they let the US government borrow money. So they're always going to get paid back. And it ends up having a very consistent return. It has these chops because that's when they pay the dividend, and then they just reinvest that money into the next treasury bill each 30 days. But you will end up with a 2% return. They pay monthly, actually, so you'll have a small monthly dividend, which is nice. This is actually a 20-year bond fund for the US Treasury. So in this instance, you're on a rolling basis, letting the US government borrow money for 20 years. The return is slightly higher, but the actual upside is much higher with actual appreciation, where you've seen for the year, had you bought this on January 1st or December 31st, I should say, you would have been up 21% plus dividends at this point. So it is a better way of having more upside, and it's still a lower risk premise because you are just letting the U.S. government borrow money. And I do believe interest rates are going to continue to head towards zero, as Japan has been in for quite some time. There's a very low interest rate environment. An ETF that's actually down quite a bit, and I recommend just because the risk reward here is very big, is the oil and gas exploration ETF, XOP. So this ETF is only encompassed with companies that are in the business of exploring and producing oil and natural gas. Because of the price of oil plummeting 55% year to date, these stocks have not done very well. But I think from here, your upside is far higher than your downside, where it could get back to maybe $30, $32 or so, but it could easily get back to $60 or $70 once the oil market stabilizes and we have some sort of large production cut announced from the US and Russia and Saudi producers. So those are the top three that I recommend this week as far as ETFs. We will touch base with other ETFs going forward, similar to SPY once the price makes a little bit more sense for me. But that wraps up this episode for this week. So we'll see you guys next time. Thanks for watching, and smash the like button and subscribe if you haven't. Thanks.